Hey, what's up, guys? It's Ryan here. I hope you guys are staying safe during the coronavirus, practicing social distancing and staying at home. Every storm blows over eventually, so this too shall pass. And keep that in mind. So today I'm going to be going over stocks versus real estate investing, the pros and cons of each of those. So let's start with stock, and just to give like a little bit of background, actually, I did invest in stocks for a good year and a half or so, and I traded a lot on Robinhood. I did read about penny stocks. I did read several books on stock trading, and from all that I realized stocks is not for me compared to real estate, which I have an obvious bias toward real estate, but we'll be going over the pros and cons still. So the pros of stocks, you can make money whether the stock market goes up or down, right? So you can invest your money and then the company does well and then the share price rises and then you made money, right? Or if you expect the company to tank, or the share price to tank of a company, you do something called short selling, where you borrow shares and then you sell it right away, and then when it does tank, the share price tanks, you buy it back, and then you give the shares back to who you borrowed those shares from, and that's called short selling. So you can technically make money whether it goes up or down, right? So that, like, if you are really great at analyzing the company's future profits, future potential, then stocks are a very good way of investing. The other thing that's great about stocks is there's a potential to, like, especially if you buy smaller companies, there's a potential to double, triple, quadruple whatever money you put into that company. As you know, a lot of people say if you invested in Apple so long ago, you would be a certain amount, like a couple thousand so long ago, you would be multimillionaire by now, right? So that is true, but it is hard to find those companies. You have to usually buy them when they're in their infancy, not usually when they're what we call large cap companies, where they have a large market capitalization. So yeah, that's something. A good pro to stocks is sometimes you actually can choose a stock that does double or triple in value. But the thing to keep in mind is sometimes it actually goes the other way. A lot of times, actually, I would say it goes the other way, especially for small companies. So you could lose half your money, you could lose all of your money. So in this way, it does it becomes something like gambling if you aren't really sure what you're doing. So another great thing about stocks is you receive dividends, and that's a share of the profit the company made that's paid to the shareholders. It's usually a percentage of the share that you buy, and so that's like kind of a passive income that comes in every quarter. Most of them pay quarterly dividends. And so that, if you have a lot of money in stocks, then potentially you could just live off the dividends. But usually dividends pay a lot lower return on investment compared to investments like real estate. So another great thing you could do in stocks, and it depends on how you look at it, it could be good or bad, is something called margin trading, where you leverage your money. You're basically borrowing money and you're investing it into shares, and that's called margin trading. You could make a lot of money a lot quicker doing this, or you could also lose a lot of money, and money you don't have. So you could go very negative and potentially owe a lot of money if you do this. So before you do something like this, of course, you have to do your research. Find a mentor before you engage in anything close to margin trading. So the last great benefit I want to talk about is capital gains taxes. So for stock trading, you don't have to pay taxes like ordinary income. You actually pay capital gains taxes if you held the stock for over a year. So if it's less than a year, it's taxed at ordinary income. If it's over a year, you pay capital gains taxes, which ranges from 0% to 20%. And that saves you a significant amount of taxes. But it's not as great as real estate, and we'll talk about that in a bit. So the cons of stock market investing, obviously, as you guys seen during this coronavirus event, that stocks are kind of unpredictable because they respond to geopolitical events. So, you know, coronavirus, right? And they go up and down a lot. And that's called, the concept is called volatility. When the stock goes up one day, the next it's down, up again, etc. So if you're not okay with being down like 20% one day and then up like 20% the next day, no, I'm exaggerating. Usually it's not that volatile, but if you're, you know, if you have issues with being afraid and being, you know, fear and greed basically, and that kind of drives your trading, then you're going to have trouble in the stock market. So yeah, that's a big con. Another is you technically don't have direct control over your investment because you're not really on the company's board of directors, so you don't have much say in where the company is headed. It's basically, you're kind of, in a sense, a little bit at the mercy of the company, whether the stock price goes up or down based off of how they perform, right? So that's another thing, is the lack of control. The last thing I would say is stocks are also accessible to everyone, and this is a con because, I mean, it's a pro because you can get into it, but it's a con because you're also competing. If you think about it, you're competing against very large hedge funds, investment firms. A lot of these firms and funds have AI now, artificial intelligence, right? So I never liked the idea of competing against a robot, right? Or you know, an artificially intelligent robot, or against someone who constantly is studying the charts and doing data analysis every day, and then you know, doing day trading as well. I just didn't like the idea of competing against that type of person, right? Or that robot. So that's why I really shied away from stock. I mean, I did do stocks, but I realized it wasn't for me. So the next part of our segment is the pros and cons of real estate. So real estate is really great because there's two ways to make money. There's cash flow and there's appreciation of the property. Cash flow is the rent paid per month, and it's great because you get a check monthly, right? Or a direct deposit every month. So that's like guaranteed income. And then there's appreciation. Some properties, most properties I would say appreciate, not all, but you know, it's a good like icing on the cake is appreciation. And plus you're using leverage, and that's another great pro for real estate, is you're using leverage. So let's say you put in $60,000 on a $300,000 property, and that property went up say 10%. So now it's $330,000. Well, you just made $30,000 even though you only put in $60,000. That's a 50% return on investment. So appreciation and leverage kind of go hand in hand to really create wealth. It's really great. You can use leverage and use someone else's money at a pretty low risk. I would say unless you stop paying the mortgage payment, you have full control over the property even though you only put 10% of the down payment on the property, right? So the term leverage, it basically means that you put in a small amount for access to a much larger amount of money. So in the case of a down payment, you put in $60,000, but you control $300,000 worth of assets with that money. So it's good to use other people's money as leverage because that builds wealth a lot faster. Another great thing about real estate is it's a lot more predictable. The market for real estate is kind of a gradual, you know, incline, or in recessions, a gradual decline, right? So it's very predictable how much you can get in cash flow. You can run the numbers. You could say, hey, this is how much the mortgage payment is. This is how much my rent is. This is how much my expenses are. So this is my cash flow. and that's very simple to calculate. If you guys have questions about calculating that, please leave a message in the comments. So the great part about being able to calculate all this is you can calculate your financial freedom age. For me, it's 31. I know exactly when I can retire, which is 31, and then I could be making $10,755 per month in rental income when, passive income when I hit 31, when all my houses are paid off. So this is a huge plus that's hard to get with stock market investing. Stock market investing, you can do this, but you would have to have like tens of millions of dollars and get dividends on those tens of millions of dollars in order to have a six-figure income per se in passive income, right? Another great part about real estate is the human aspect. You're not competing against robots or faceless humans. You are providing a service to your tenants, and so it's the human aspect of creating this community and really working with your tenants that is a huge plus for real estate, I think. I wouldn't do real estate if you don't like, people in general. If you don't like people, if you don't like working with people, if you can't empathize with people, don't do real estate, right? So another great thing is you have direct control of your profits. As we talked about earlier, compared to stock market investing, the company has the control over your profit. Real estate investing, you have direct control. You can say, like for me, I could put 2 tenants in 1 bedroom and make more rent that way. So you can control that, and you can minimize your expenses as well. That's totally up to you. If you do preventative maintenance strategies, you can minimize your expenses and, of course, increase your net profit on the house. And then the last thing that's really great about real estate investing is the tax benefits. There's 3 Ds for the tax benefits. Real estate is depreciable, it's deductible, and it's deferrable. So depreciation is just like, basically you take the price of the property, subtract out the land value, and divide that by 27.5 years, and you get a certain number, and that's the amount you can take off your taxes, off your rental income. You can deduct it from your rental income no matter what. And that's great. You can do that, every year for 27.5 years if you wanted to, or you can even do something called bonus depreciation under the new Trump tax laws. And then, of course, discuss this with your accountant if you are interested in that. You can also do a lot of deductions, right? So you can deduct your internet bill, your phone bill if you use them to contact your tenants. You can deduct mileage, expenses. You can deduct meals every time you visit the property, and then have a meal and maybe work on your real estate with a partner, or maybe you're doing some tenant showings. You can deduct a portion of the meal for that, right? And you can defer your taxes, right? So there's a 1031 exchange. There's something called 1031 exchange, which refers to the IRS tax code 1031, where you basically defer capital gains taxes and depreciation recapture taxes basically until you die, and then you still don't have to pay them because your next of kin will inherit the properties as a step up basis, which basically means they don't pay any taxes on the property. So yeah, you can end up basically never paying taxes on your appreciation on the on the property in general. So that's a huge plus. There are some cons, of course. So the first one is the knowledge barrier. A lot of people, real estate is a whole new, they don't teach it like in school, right? So it's a whole new ball game for a lot of people. You do have to do your research. I recommend hiring a coach or a mentor because they can walk you through the whole process, make sure you don't make the newbie mistakes that a lot of people make. So another thing is finding high quality tenants. That tends to be difficult for a lot of new investors in real estate. You don't want to get a tenant you have to end up evicting because they can't pay the rent. And then the third thing is you need a pretty large down payment in order to buy a property, usually 20 to 25% down payment if you're buying an investment property. You can do less if you do house hacking where you stay in the house, but if you do an investment property where you're not living in the house, you usually have to do 20 to 25% down payment on that property. So for a lot of people, this provides a barrier to entry, but you can take advantage of that, because if you can afford that down payment, you're way ahead of the game. You're competing against a whole lot less people compared to if you invested in the stock market. You're basically competing against everyone who has access to an app like Robinhood, right? So yeah, there you go. Those are the pros and cons of stocks and real estate investing, the ways I see it at least. Definitely don't take my opinion as the only opinion out there. Of course, for all tax related questions and what I talked about in terms of taxes, I am not an accountant, right? I'm not a tax expert. If you have questions about taxes regarding real estate or stocks, please consult your tax accountant. And that's all I have for you guys today. Please like and subscribe. I hope you liked this YouTube video and found it informative. And stay safe, guys, during this coronavirus epidemic.